is a special day. It's been many years since I've had the chance to talk to Peter Brandt. You may know of him because Jack Schwager wrote about him. Jack would admit, Peter, that it was an oxymoron to put you in unknown market wizards because Peter is known by hundreds of thousands of technical traders over the years. I remember Factor when I was still updating my charts by hand, Peter, in the commodity perspective that had ketchup and mustard and coffee stains all over it. So I really appreciate you granting this interview. Welcome.
Thank you. Uh, yeah, perspective. You had the big charts. You had those
Yeah,
big charts where I used this the CRB.
yeah, I remember them. Yeah,
Yeah, so I had to use a really fine point pen because
yeah,
I didn't want to buy them every week because I had my lines drawn in.
right. Yeah, it's a lot of
Buy them
work.
and then use them for a month, so you'd have to put whatever 22 days on a bar chart
Right.
all messed up, and eventually your chart's so messed up you actually have to buy a new chart book.
We didn't know what interday was, did we?
Dale, I remember when, like, at the Board of Trade, we're in 15th floor, where all of a sudden they made available to us traders this computer where you could print off a chart.
VidCom.
Yeah, and it was on that paper. Remember that kind of wax paper
Yeah,
they had?
it was like fax paper
It
almost.
was like fax paper. It was fax paper.
Yeah,
It was not plain
yeah,
paper. It was that shiny, scummy paper, and you see it.
yeah. We had a little freezing going on here. All right, so we had a little freeze up there on it, Jack. Let's get to what was your first entree into the business? Was it as a floor trader at the CBOT? What got you interested? Did you come from an agricultural background or you're laughing?
Yeah,
What was it?
I came from an agricultural background, but I had no interest in that stuff. I graduated from the University of Minnesota, with a double major of marketing and advertising. So I was hired by, at the time, was third or fourth largest ad agency in the world in Chicago.
Yeah.
And so, I moved my young family to Chicago to be in the advertising business. And, here I'm in my kind of early 20s at the time. I already have two kids and a wife. And so they kind of put me on a fast track. And so it was a huge agency, but I met another father in youth sports where we lived in Evanston, Illinois, who was a bean trader. And
Okay.
John would say, "Hey, come on down someday and I'll buy you lunch. You can see what I do." And I went down and we had lunch on the fifth floor of the Board of Trade overlooking. I'm trying to remember what pit was right below us. I think it might have been wheat. Uh, Underneath the members' dining room, and these guys are shouting and yelling and screaming and pushing, and I went like, "Whoa, this is for me, baby!" And I knew nothing about. I mean, I knew nothing. I knew
Yeah.
nothing
Yeah.
other than I knew these guys only had to work from 9 until 1.
Yeah, they had great hours.
Great hours, and then they drove their Porsches back up to Lake Forest. Uh,
Yeah.
and they're not doing memos and meetings. And I go, "Hey, this could be cool."
Yeah.
So I just scrambled. I just thought I want to do this, but there was no MBA fast track. No one was hiring. I mean, the commodities back then is survival of the fittest. Is jungle, baby.
Yeah.
And so I just started knocking on doors. Who wants to hire a young guy who's willing to work hard and learn the business? And
Cool.
I was hired by Continental Grain Company, which at the time was second largest raw material
Yeah,
purchase
Conti.
in the world. Yeah,
Yeah,
Conti.
good
And
break.
good break. And I wanted to be hired for the Minneapolis office because I could have moved back to Minnesota. They didn't have anything, but so I stayed in Chicago. And it was a deal like, okay, Peter, you want to be in the business, go out and get business, right? I mean, you want to be in the commodity business, you're going to have to find somebody to do their grain business through us. And so, I was a hustler. I've always kind of been a hustler. I came from a family that didn't have anything. It was a welfare. I came from a mother who had welfare payments to buy her food. And, but I was willing to hustle. I brought in really actually a huge amount of grain business into Continental through Conti, and enough so that within a year I was making what I was making in advertising, and that's I knew from the beginning I wanted to be a trader. I didn't want to do customer business. I want to trade my own account.
Right.
I want to be
Yeah,
like the big boy.
you didn't like cold calling off a DMB card, Peter?
No, no, I didn't.
How many dials did you make a day before you said, screw this?
Well, I mean, I knew that was my only way in. I mean, I knew I
Yeah,
had to learn how to trade, and I believe people who were telling me that, Peter, there's a steep learning curve. Don't expect to be where you want to be. It's going to take you years to figure out how to do this. And they're literally true, because this is 1974 that I sought to be in the business. It wasn't until 1979 late that I started having any kind of nice profits in my trading, because
that's interesting, Peter, because I've interviewed many hundreds of traders, and I asked them how long it took for them to make a breakthrough to where the market was starting to support them. Not always. We all go through drawdowns, but the average answer was 4 years, which kind of makes sense. It's like at least you have to get an undergrad degree. And if you're in a trade, you don't start off as a master, you're an apprentice, and then you're a journeyman, and then you finally get the big license. So yeah, I think it was Jack who said we're in I know you like this, Peter. Jack said we're in the only business that people think they can read a book over the weekend and be ready to go on Monday.
yeah. And hey, to be honest, I have known a few guys that just came in and had magic.
Okay.
They just had the magic touch.
All
But
right.
they're few and few and few and far between. Few and I mean, we're talking Michael Jordan, Tiger Woods stuff here, right?
Yeah. Yeah.
But yeah, I mean, and it wasn't until 1980 that I really felt like, okay, I really think I've got it. And it really wasn't until 1981 that I said, I no longer want to have any customers. I don't want customers. I am ready to cut the
Yeah.
thread. I am going to make a leap of faith. And
Walk the wire without a net.
well, I had already blown out probably 3 accounts. I don't know. I'd have to go back and look because I still have.
Okay, there you go, everyone. Peter too. I mean, most of the great traders embrace their failures. I bet you learned more from those blowups than you ever learned from a good run.
You know, I learned the most from old guys who talked to me about the blowups after the blowups. I mean, the reality of being back in the Board of Trade is I was in this fabulous architectural building filled with people who were speculators and
Yeah,
who were professional speculators, who were the top speculators in the world.
in the world.
And, they wouldn't volunteer anything to you. But if you said, hey, uh, Kelly Grain, let me buy you lunch. And, and you'd ask them questions, they would tell you stuff. And, you weren't asking them questions like,
Where do I buy the beans?
yeah, where do I buy the beans? Do you use an 18, do you use a high-low close bar chart, or are you a point and figure chartist? No,
Yeah.
you'd ask them things like, you know, what do you say to your wife when you tell her you can't put her on a budget because you don't know what you're going to make? Uh, or if you have a bad day, does your dog know it when you get home? So it's kind of
I think your dog knows it.
my dog would stay away from me. Not that I'll ever mean to the dog, but it just had the sense like, okay, I'm not sitting on his lap tonight.
They know
Yeah,
everything.
yeah. So you blow up an account. I mean, I was fortunate because Continental allowed us customer guys to trade. We just couldn't. We couldn't.
There was
You know,
nothing to withdraw.
yeah, we couldn't run an order before we put a customer 2 million corn in at the market again, right? I mean,
Yeah.
you can't do that. But they allowed us to trade, but we had to have, I can't remember, a $5,000 or $10,000 account. So I have a $10,000 account and blow it up, another one, blow it up, another one, blow it up. Finally, where started seeing some. So when I cut the ties, and it was October 1981, where I said, "That's it, I'm on my own." We had $88,000 in the account. That's really kind of my initial deposit, so to speak. Which I mean, may seem like that's not very much, but you got to remember that back then, if I made, I don't know, 4,000 a month, I could support
Live
my
pretty
family.
good.
Yeah, pretty good,
Yeah.
absolutely. And and actually, I was making more than that from the customer thing, and I sold the customer business, to put together the capital. But but we're trading copper at 50 cents. We're
I
trading
remember.
corn
Yeah.
at $1.85.
Yeah.
Um, and so it was a whole different world. We're trading silver at $4. So 88,000 was a pretty good account. But even then,
Right.
I kind of knew from chit chat and rumor how much some of the better locals had trading, and it was kind of, well, don't even consider yourself a trader until you've got $1 million, right? It was kind of that was kind of the underlying thinking back then is, if you got $1 million and you've supported yourself for 2 years and you haven't taken any huge haircuts and hey, and you got $1 million in your account, then
You've made it.
yeah, welcome to the club,
Yeah.
right?
Okay. Yeah.
So that was kind of it, because even a lot of guys back then would borrow seats. Guys that own more than one seat, and then they'd lease seats.
Right.
The guys wanted to come on, and so there was a constant turnover. Especially in some of like the bond market. You just see new faces. There was a lot of new faces in the elevator.
Well,
And
let me ask you something, Peter. Was it like it was in the television series Band of Brothers, where when the replacements came in, the veterans didn't even want to know their name because they knew they didn't want to like them because they knew they wouldn't be around long.
well, it was kind of, and it was tough for because
Huh?
no one knew and you kind of, if you held paper, in other words, you weren't
Yeah.
trading for an account, but you were
Yeah.
filling paper, you
You
were
got
ejecting.
paid for doing that.
Yeah, and so
Yeah.
a lot of the members were just day traders, and not like they are today, but they were the ones that the guys with the big orders would fill their orders with their friends. 10 done to you, 5
Yeah.
done to you, sold. So they
Right.
stood around these guys that would do a million corn at a time. And that's where I was, corn.
Okay.
So yeah, I mean, it was kind of like that, more in some pits than others, right? I mean, soybean oil, that's really kind of an institutional product. So you either had professional scalpers or you had professional brokers. But you get into bonds or things like that, you hogs, you get where you get a lot of newbies coming in thinking that they were hot shots and they're gone. they're gone in a month or 6 months, whatever.
Yeah,
But
or according to the book, The Unknown Market Wizards, they're in a major drawdown and they used to be in the wheat pit with you, and you'd look over and they'd be in the oats.
yeah, you always knew guys, right?
Huh?
All of a sudden you see somebody in the oat pit that you knew belonged in the wheat
Yeah,
pit, and you go, golly,
they're trying to
what?
come back in the oats.
Joe didn't have a very good week,
Yeah,
right? So, and that was kind of the pecking order to some degree. Beans, right?
yeah,
Well, bonds had their own room back then.
yeah.
So
They were big.
bonds,
They were big,
well, you
huge.
remember the first interest rate market was Ginnie Mae futures, mortgage futures.
Right.
That's how it all started with Ginnie Mae futures, which was created by Richard Sandor. And I remember when they first introduced that to us members, we were going trading in what, 30 seconds?
Yeah,
Whatever. But so, but that's, the guys that were leased seats, they trade bonds or they trade, you really wouldn't see them in soybean oil or meal. Yeah, they trade the beans, they trade the corn, they trade the oats and the wheat. But so you kind of knew which pits had big commercials, which pits had really big independent traders and so forth. But
okay.
I left the floor as soon as I could leave the floor. I was off the floor. As a
Because you were probably a position trader. You turned into a position trader. Why do you need to be there? You probably even want to hand off your order to someone else so you don't have an out trade the next day.
yeah,
That's what I did.
Yeah, out trades are a whole nother story, right? That's where you knew who you could trust.
Yeah.
Yeah,
People lost their seats over those out trades.
who you could learn to trust, not
Yeah.
knew you could trust, but who you could learn to trust. But yeah, what happened is I got turned on to charts finally. I think that's a friend of mine said, Peter, we're going down to the bookstore. Bookstore was across the street. It wasn't in the Board of Trade building. It was one building across the little side street to the west. And bought me the fifth edition of Edwards and
Yeah.
McGee.
I knew you were going to say the Bible.
Yeah, well, the Bible's Shabbat, but Edwards and McGee, as long as it's earlier than the fifth edition, it's definitely it's the Bible. It's the new standard version or whatever.
Yeah.
But yeah, it was, and it made sense to me because I had tried other things, right? I mean, I'd blown out with other things, but charting is like, there was just something about charting that for me, even as a kid, I remember back fascinated with maps.
Yeah, it's geometry. Isn't charting geometry?
I love geometry. I love geometry. It was
formations.
My favorite subject. I love maps. I could go into the library for a book and find a book of maps of the world that have been printed over. Yeah, I could spend an hour looking at that. So charts, like for me, were ding, 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 ding. It was the bell rap.
I know what you mean.
Yeah, and so I started buying the charts and keeping them up rather than keeping them by hand. For a while, I kept them by hand, and sometimes I would keep them by hand if it was something I was really interested in. But I saw a chart of sugar, number 11 New York sugar, and I went like, "Whoa, this is something I could be interested in," and so I left the floor. I mean, I really happened to tag it, and I that was it. From that point, I'd go down to the floor periodically. Campbell Soup wanted to do 3 million wheat, or McDonald's wanted to place a huge order in soybean oil. I'd go down and superintend the order. But from at that point, I'm trading off the Quotron machine is what we have. Quotron.
Upstairs. Yeah.
Yep. And then of course CQG came in and that changed the world. I mean, that was the big deal maker, right? That was CQG just elevated the game. And, what was that? 79, 80, all of a sudden
Yeah.
CQG, and you could do different quote charts, and you could really start.
You have to wait in line to use it.
Yeah, you'd have to wait in line, but then eventually,
everyone had them. Yeah.
Yeah. And so 80 was a good year. 81, I'm on my own. 82, Magic. And at that point, I decided, two things happened that you might remember. First was that the Board of Trade said that you don't have to be on the floor to get your member rates.
Okay.
Prior to that, you wanted to trade a ticket for whatever cents.
Yeah.
The cost was, it's one deal. You go upstairs, it's a different price.
Right.
You leave the building, it's really a different price. And so Board of Trade said member rates no matter where you are. And then CQG came out with the satellite dish.
Yeah.
That's so big.
Yeah.
And all of a sudden, you didn't have to use AT&T long line, which was costing me $1,000 a month back then, right?
Yeah. Yeah.
So that was almost like a Bloomberg now. And I decided I'm out of Chicago. I'm out of here. And so I moved my families to a wonderful home in northern Minnesota on the lake, my home state, just where I grew up in this lakes country.
Yeah.
And put up a CQG satellite on the roof. And
and now you have a vice presidential candidate from your state.
Oh my! I don't want to go there. I don't. Yeah.
All right. Anyway, I know.
Yeah, I don't even want.
I thought I'd blow your mood. I thought I'd blow your mood.
Yeah.
So,
I mean, talk about the presidential candidate and his running mate will be a very good segue into why we might be bearish the dollar. But
all right, beautiful. And you brought up. It is a good segue. You know what else was? You brought up the commercials and the oil pit. And I know part of your rationale, besides technical, in the Canadian dollar is the COT setup. So, I trade it the opposite, inverted way that you do. You traded CAD USD. In retail FX, you traded USD CAD. So this was Sunday night in Asia. And I wanted to ask you about something that I know you heard on the board of trade. Do you still believe in stop hunts? And was this one? And the only difference is you don't hear a roar like you used to hear on the floor, Peter. You just see a wick.
Well, here was the interesting thing on that is I have been looking at the Canadian dollar for, God, it seems like months.
Yeah.
And I mean, that's the deal. If you're a chart trader, early on when you're a trader and you haven't figured out that your emotions are your enemy.
Yeah.
You see a pattern and you're just biting at the bit to be in it. I can't stand not being in it. I see the pattern. I go, what do? I got to be in it.
I have to at least have have a small token position on, so I pay attention.
Yeah.
How do you feel about those? You don't do them.
I don't like him, and I'll tell you why. I'm not looking at you here because I'm trying to find a chart because
I'm going to find the reverse of it.
Yeah. Well, I'm trying
because I understand. I would too.
Yeah, I'm trying to find the chart. No, but I can talk to it. I can really talk to it because what you're looking at, and it's important for people to remember that when we talk about being long USD Canada is not the same thing as being short Canada USD, right? They trade
it's the opposite.
Reciprocal. Yeah. You divide them into each other and you can figure out what the other one is. And so really the thing on Canada that I was looking at was this massive, what I called a complex continuation head and shoulders pattern dating back to early fourth quarter 2022. And so you had a complex left shoulder, you had a head, you had a complex right shoulder. And I was looking at that saying,
There
you
you go,
know,
Peter.
yeah, on the surface, I'm just as bearish as can be because continuation head and shoulders can be more powerful than reversal head and shoulders. But I was really shy about this because I was looking and saying that the commitment of traders are showing me that there's never been more imbalance in ownership of the positions. Yeah. Remember that in futures, for every short, there's a long. For every long, there's a short. There are always someone on the other side of your trade. You don't know who they are because it all gets matched with the clearing corp. But so I know that we've never had commercials as long in a futures contract in Canadian as we have right now. That the hedge funds have never been more short than they are right now. Now I want to be on the side of the commercials.
Yeah, they have deeper pockets than us, and they could ride out things longer, right?
Yeah, well, oftentimes what they have is a hedged position, so they really don't care. But so all things being equal, I want to trade against the hedge funds. And so, but I don't want to just do that because of commitment to traders. I want to see something on the charts. And so I had been watching this continuation head and shoulders thinking, if we really break down through the bottom of this, hey, that's going to be more telling for me than the commitments. And I had been willing to take a short position. But I also felt like oftentimes you get a head and shoulders that really becomes another pattern that's really much rarer. And you can look at it as a head and shoulders that fails, but you also can call it a compound fulcrum. And this is a compound fulcrum. Anybody that's listening to us, they could probably Google what the word compound fulcrum, and they could get some geometry explanation of what that actually is. But so that's what I look at in the Canadian dollar. And so I came in on Sunday and, all hell had broken loose in crypto and stuff. And I came in and I actually had a sell stop in Canadian dollar futures that did not get hit.
This is the wick that Peter's talking about.
Yeah, it was a sell stop that was below the low of that wick. Yeah. And so Monday morning, I'd like to know. I don't stay up and look at markets during the night, but I come in and want to know hey, do I have any fills? And I look and say, well, no, I didn't fill in the Canadian dollar, but look at that purge down that had immediately turned around.
Right.
And two things came to my mind immediately. Short squeeze. This is a bear trap. And that this down was the final bear trap. Market had recovered. And I had the feeling I can buy this thing right now at the market at current levels.
Yeah.
With a very measured risk, because my risk was the low on Monday. Yeah, I really had no risk in the trade, so to speak. But God, did I have upside. And so, for me, asymmetry is really important.
Okay.
Everyone talks about, I want to take a trade that has a 3-to-1 risk reward ratio. I'm not big on that. I mean, I'll take a trade with a 1-to-1 risk reward ratio if I feel right about the trade. But when I get a trade that has a story to tell, it has a technical narrative I can create, and it gives me an asymmetrical risk reward like this does, that I'm risking 70 points to make 700 points.
Okay. Well, it's a natural resource-based economy. Does that thinking come in at all? That oil at times, a strong oil market would feed into
I hear these people today. Hey, and remember, Dale, we were rare as chartists. Everyone charts today. No one charted in 1970s. It was rare. Yeah. There just were, you'd not see charts around. People didn't keep charts. They weren't chartists like they are today. There's none of this RSI, stochastic, Bollinger Band.
Yeah, stuff. They've got everything. They don't know how to use it, but they've got everything.
We had bar charts or point and figure charts.
Yeah.
With volume.
Right.
No commitment to traders back then. So yeah, I mean that was it. So it was no, but I hear people create these fancy, complex narratives. If oil goes up, that means
Correlations that don't always hook up.
metals will do this. The stock market will do that. And I go, that's a yawn because I just think I'm gonna interpret markets on the basis of their own charts and not try to create narratives. Because even if there is a high correlation, correlations end. And
Yeah.
I'll tell you, when correlations end, the moves in the opposite direction can be something special. Um, Dale, back when I started, one of the big correlations, everybody now has
Silver
whatever.
and beans.
Yeah, whatever. No, it was wheat and gold.
Oh, okay.
Wheat,
Biblical.
wheat and gold was the big correlation
Okay.
back then. That was kind of the big complex narrative you'd have people tell you about. So
Huh.
I'm not into. I know that.
Yeah, because they kill you. I mean, they're nice to talk about, but I wouldn't trade them.
Yeah. So
Yeah.
anyway, that's how I looked at
Okay.
Canada. Wow, this
See,
is a big.
this is Aussie did almost the same thing. All right. They're both commodity currencies,
Yeah,
right? So, I don't know the COT setup in Aussie,
not as
but
good.
it's not as
Commercial,
good. Okay.
no.
So
Commercial
I
long, but
think you're looking at a pretty big trade, Peter. I know you already have a lead, but if I look at this and maybe I'm just think I have a little, I become Nostra Pinkard sometimes. You know what I mean?
yeah.
That, that 76 should be, potential target. And
Well, I
then
think
and
go
then
to
80.
80, 81, I think is where it could go. But
Yeah.
hey, I mean, trades unfold a day at a time.
Yeah, exactly.
I what I and the I was going to say something. You had asked a question about startup position. Reason I kind of got out of the idea of startup positions is I put a startup position on, and your position comes first, then your opinion follows. Sometimes,
Right.
and some people want an opinion to what,
They do it the wrong way, the opposite way.
but I don't want to do it either way.
Yeah.
I want to put a position on and have no opinion, or if I have an opinion, have it very loosely held. And so that's the problem when you put a position on. All of a sudden, your mind starts drifting toward reaching an opinion on that. I really don't want. I don't like that. I don't
Yeah.
want to allow that in my life. I'm a swing trader. Opinion shouldn't matter to me as a swing
Oh,
trader.
all right. I want to ask you about what I've heard about your money management skills, which are as or maybe more important than being right, is that you prefer when you're a believer in partial profits
Mm-hmm.
and then moving the stop to BE or maybe a technical area, maybe BE is not technical for you, to take the risk out of the trade. And because if you don't take partials, you're believing that there is 100% probability the trade's going to work longer term. So tell me, am I correct in your philosophy of taking partials?
Oh, yeah. I mean, hey, when I think of it this way, so I start in 1975. So that is 30 years after World War II ended. So I'm in the pit. You have guys in the 50s in the pit that were World War II soldiers that took bullets. And imagine that. I'm trading and having lunch and riding elevators with guys that were in Omaha Beach, and you know,
Yeah,
this is crazy, right?
yeah,
But these guys were the wise old coots. They were wise old coots. These guys that traded the markets in the 70s and 60s, they just bled wisdom. And
well, you know
you
what? Maybe they also didn't have, after what they went through, that fear which is a big emotional problem for a trader in both getting in, getting out, just trading, living with fear.
Yep.
So they went through so much that maybe they didn't feel the fear anymore because they faced the Grim Reaper every day for a few years.
Yeah, but they also knew that, hey, you only advance so far against the enemy, and if you try to keep pushing further, you're
Okay.
likely to die, which
Yeah.
led them to say, we do not pyramid. We do not believe in pyramiding. Pyramiding
Interesting.
bad, not
Interesting.
pyramiding good. And part of that is it's healthy to take money off the table. You can't pick bottoms, you can't pick tops. So why try to wait and pick a top that is easier? If a market's, let's say, I buy it at 100, and I think it can go to 150. What's easier? If you get out at 140, uh, and you leave some money in the table, that gives you one emotional urge. But what if you don't get out, but you get out at 140 on the way down? That would have been harder for me. You
Yeah.
know, it's easier for me to get out and watch the market keep going than let a market roll over and take pain on mean reversion.
Yeah.
And so I just always learned, no, take money off the table. And so, not necessarily the first day. I mean, it's just you want to take money off the table so that you bring your risk back in line. It's the reverse of pyramiding, really.
Yeah.
You're my biggest position is the moment I put it on. That's always true. And
Interesting.
from there on, I get smaller.
Okay.
And uh, and for me, taking money off the table really is, if I can. So I trade tranches. I'll trade two tranches. But it's one trade. I put it on in one order, but in my mind, I've got these two sections. One at which I'll get out if I can take somewhere between a 70 basis point and 100 basis point profit. This other one over here, that'll give me the ability to give this other one over here room to move.
Right.
You know, uh,
Okay.
if I have
I did want to ask you about partials because you talked about your background and your childhood and what you came from. And in a similar way, I did as well. So, people that have a paradigm of scarcity as children, um, always remember that it's, something that I'm sure you still remember. And even now in my career, I have a hard time risking profits because of that. It's so selling half or liquidating half is the compromise for at least something has been taken to give yourself a chance to be there for windfalls.
yep,
But that was one of the most difficult paradigms for me to overcome. I think people bring their childhoods and their paradigms into the business and aren't even aware of why they're making decisions and need to take a look at that. What do you think about that when traders look in the mirror?
so my mom and dad, uh, between the ages for them of 9 and 18 was the Great Depression in the United States.
Yeah,
And if you do not think the Great Depression made an impact on kids in their childhood, wow. And that was then expressed in everything they did and everything they taught us. And so I I am risk adverse. I hate taking risk. I mean,
interesting.
I run from risk. Uh, and so that's kind of reflected a little bit in that. Uh, I take losses real quickly, but I do take partial profits because I want to be able to say, hey, at least I made something on the trade.
Right. You still have to get paid,
You got to get
right?
paid. Yep,
It's not a hourly wage, but you still have to be paid.
yep, yep.
Okay, look at that. So I'm showing your website Peter, and I just want to end with maybe one more market and we could time a theme together. So while I was on your X stream, and I always had trouble understanding them. In fact, I don't see it right now, but you're talking about a diamond formation in the euro. And underneath the commentary, it hasn't broken out, I don't think yet, has it? Probably that line comes into play.
Yeah,
Uh,
well, yeah, no, yeah, no, I'll talk to that because there's a problem
okay.
with that.
Okay. So diamonds have a formation going this way, and then when you go back to the left, it has a similar like formation going the other way. Are they reversal formations, Peter? Diamonds?
They can be. I mean, that can be. Here's the thing: is I normally a diamond is basically you have a megaphone on the left hand side. In other words, an
Right. You have
expanding.
this. Okay,
Then you get the shaft. You get
I'm
the
gonna draw
like,
my I'm gonna draw my first diamond formation with the master of technical analysis. So I would say that this was part of the diamond, right?
yeah,
And that this right here would also be part of the diamond if
yeah,
my
yeah.
hands didn't shake because I'm
And then, and
over
then you can see
70.
the flagpole. The flagpole was the decline uh, from
Yeah,
really what was the high in July 2023 down to the
that's
low in October 23. That's the flagpole. So you
okay.
have,
So that's a diamond right there, right?
yeah,
I draw it properly.
yep, and
Anyway, if it fails from here, does it become a cubic zirconium?
uh, yeah, maybe I can make a ring out of that for my wife.
Yeah, nice. So
No,
you're saying this
wait.
kind of compression is setting up for a big move, but you're not sure which way yet. Is it a
Okay.
continuation formation
Uh,
off the
the found
flagpole?
I'm a classical chartist, and the founders of classical charting, who would be Richard W. Schabacher,
Okay.
John McGee, Robert Edwards, would say that symmetrical triangles are characteristic of a market that has no clue what it's supposed to do. It,
Okay.
it it's a picture of confusion. And I don't like them to begin with because we deal with diagonal lines. I like patterns that have horizontal lines. I don't.
Okay.
I'm not. I hate trend lines. I think you throw a chart book into a gorilla's cage, give them a ruler and a sharpie, and the
Yeah,
gorilla will
I
draw.
say trend lines have a destiny to be broken.
Yeah, and redrawn.
Yeah.
But yeah, so you've got a symmetrical triangle, and so we don't know. And the problem is we could punch through that upper boundary. But it doesn't mean anything until you really take out the December 23 high,
That's
which was
it.
that
One
first big rally after the flagpole.
right.
And so you can come out of this, and some
Fail.
triangles have a tendency to morph,
Okay.
change into something else, or not be what they are, or be what they are and then fail. So they're not really to be trusted on a tactical basis. They're not to be trusted on a directional basis. They can be very informative. And I just feel like this is a diamond that is going to produce a real good trade.
Okay.
I'm just a little unsure of direction and timing, which, by the way, direction and timing are the two most important things with the trade, not the idea. The idea obviously is important because trades start with ideas, but there's very little edge in an idea, just as there is really almost no edge in a chart pattern. The edge is in the trading tactics, the sizing, risk management, trade management. That's where edge is gained. But nevertheless, you got to start with something, and I just think this diamond has potential. You just can't find another period in modern trading history where the euro dollar has remained in a tight range for
Yeah, it's very
now.
unusual. Well, very
Yeah,
well managed. Very
very
well
well managed.
managed. Yeah.
And that is really what happens within a pattern. We just don't see it, but patterns are produced because of activities of the whales, what the crypto guys would call the whales, or the big commercials, or the big spec houses that really know something that you and I don't know and won't be talked about on Bloomberg for 2 years. So, and so there are people that are accumulating positions. There are big bets that are being placed.
Yeah.
So there is just a whole lot of engineering that's taking place by people a lot bigger than I can even imagine being over this period. There's a lot of energy. You push a market, you restrain it into a range. I
I
mean,
felt a lot more comfortable about a dollar breakdown, Peter, and I want to ask you how you feel.
uh,
Till I heard that a Trump Vance administration is looking to weaken the dollar, and I felt like, oh, now it's going to become a consensus trade because everyone's going to put on, a weak dollar would be a Trump trade. Um, how
yeah.
how are presidents and the administrations, the Treasury, if they want a weaker dollar, how do they accomplish it?
Well, yeah. I mean, that's just global macro. A lot of that's political yak. So you discount most of it as political yak.
Yeah, okay.
So you ignore it.
Yeah,
Uh, that's the first thing you do with it is ignore
ignore
it.
it. Okay.
Yeah, ignore it. It's fake news. Um, so, but obviously, I think the market. I mean, you can. Here's the thing that I've learned from really guys that are really good traders is you got to know the story behind your own trade, but you also have to know the story behind the guy who's got the other side of the trade.
Yeah.
Uh, because there may be some really smart guys that have the other side of the trade. So you better know their argument. Where it seems like in the modern day social uh, networking, Twitter, Facebook, and the like, people don't even want to hear the other side of the trade. They
No,
don't.
no. They'll block
They
you.
don't. They'll mock you.
Yeah, yeah, yeah.
Yeah,
I know.
yeah. I mean, it's not like I used to go in the corn pit and buy a million corn and then think the guy that I sold it to is an idiot because he's on the other side of the trade. That's you got to know, because you got to know that no matter what your trading idea is, there's some people who don't think like you,
Yeah.
and there are people who actually may know better than you which way the market's going to go. So yeah, yeah, yeah.
Keep
You
an
got,
open mind will keep your account open.
well, keeping an open mind and assuming you're going to be a loser on your next trade will keep your capital together, and
Yeah.
it'll buy you time to be lucky. Because
Great
quite
one.
frankly, I think that in the final analysis is really a part of the equation. Is you learn to lose till you're lucky, and then once you're lucky a couple of times, you start to learn. And then you put it together. But you got to go through all of those cycles. That's a pretty big roller coaster to get you to that
How many
point.
screen hours you think you've put in your career, and that include updating charts on paper?
Yeah, I mean,
Me and you
my
combined. What
life.
do you think? A million hours?
I don't know. Yeah, I mean, I don't know. Maybe I yeah,
Yeah.
I'm a swing trader, so I'm not a day trader.
Yeah.
So guys that are day traders, I'm going to give you a number that they'll think, God, he's just a tiny little minnow. But I've figured I've probably done 40 to 50,000 trades in my life. I
Okay.
figured that out, and
Okay. Interesting.
I did some random sampling to even verify it. So I don't know how many hours of looking at charts that is. I don't actually look at charts very much. I can look at charts as entertainment, right?
Yeah.
Hey, that's interesting. That's pretty cool. Look at that. But
Yeah.
that's different than saying I'm looking at charts to see if one can find me, right? Instead of me finding a chart,
I love that.
I want a chart to find me
I
and
like that.
scream at me and yell, "Here I am." And
Yeah.
so for me, I trade futures, global futures. I love the global markets. I love European grains. I love Asian equity. And so really my universe, unlike these stock guys, my universe is maybe 40, 50 markets.
Okay.
But now within those markets, so, I'm looking at maybe two continuation charts of soybeans plus the September chart plus the November chart, so, I might look at, two or three different versions of gold. So,
Okay.
maybe it's 150 charts. So I scroll through that in an hour. And so by Friday afternoon, Saturday morning, I know what's going to be on my candidate list for the next week. And so from then on, so there's times then where I'm spending time with the chart to determine where do I put my order in? Where am I wrong? What's my sizing going to be? Day order only, 24-hour order. It's all of those tactical process questions. But that's a minority then probably of the time I spend with charts during the week.
Okay.
I'm just scrolling through charts for entertainment, just see crazy things that happen, not looking for trades.
Yeah, great surfers don't try and catch every wave. I want to deal with I want to bring up your philosophy and leave it with people. And your philosophy is deal with the possibilities, which means being open to anything and everything that could happen. Not probabilities, because is it not probabilities because that would be that would include a bias? Probabilities, right? Because you're thinking and never certainties,
Yep.
because that's an oxymoron in the markets. Certainty.
Yeah. And that's a concept, Dale. It really is causing fits with some of the younger generations. They don't connect with it. I think they will. I mean, there'll be a day when absolutely they'll connect with it and they'll go, golly, why didn't those old guys tell us it sooner? But they'll have to make enough mistakes to figure that out for
Okay,
themselves.
well, let's go to a market where they might, and wrap it with this, because I haven't heard the bear case in Bitcoin. So because you walk the talk about your philosophy and respect that there are smart people on both sides of the trade. Give us the bear case in Bitcoin. Everyone knows the bull case. What's the bear case?
Hey, and I believe the bull case enough, Dale, that Bitcoin, not right now, but a month ago, Bitcoin was my largest single position I had
At
in my wealth
52?
portfolio.
Yeah, at
Uh,
52, right? When it
well,
came off that.
back when we were in the 60s, I mean, things started turning for me. But yeah, I mean, I first got into Bitcoin in 2016,
Yeah.
2017. I'm not a Bitcoin maximalist. I wouldn't define myself as that, but I am somebody who definitely understands the narrative for why Bitcoin could go to 1 million. I mean, and I felt that all along. But I have been ever since 2016, 17. I have drawn a line in the sand to say to people, there's a 50% chance that Bitcoin will go to whatever your number is, 100,000, 200,000, half a million, million. I don't care what the number is. Name the number. And that's a 50% chance. And there's a 50% chance that it could become basically a beanie baby, pet rock, worthless. Now, of course, you say that people have a fit.
Right.
But the bull case is that when I was born, a dollar was worth a dollar and bought $1 worth of goods. And that same dollar when I was born now buys 3 or 4 cents worth of goods. And that'll be true for people who are born now and live to be as ancient as I am. They'll be able to say the same thing. And so what is it then that can become a store of value? And that's
Yeah.
what Bitcoin's bull case is all about, is it's the people's choice to become the global fiat currency. And Federal Reserve banks do not take that threat lightly. And so really what you have is basically a battle going on. It's changed somewhat now that we have ETFs, but at least initially was, the poor man saying my currency is Bitcoin and your currency will become worthless, your fiat currency. And so, I mean, that is largely the bull case for Bitcoin. It's not the transactional abilities of Bitcoin as much as it is the store of value.
So would the
And
bear case be a terrible economy, depression-like environment that people have to sell everything? No, and it
no,
no.
no, I think it's just governments.
Oh, the government kills it.
Yeah, I mean,
For
remember,
what? Their CBDC?
yeah, yeah. I mean,
Oh
basically,
yeah, I heard that. Yeah,
track
yeah.
everything. They
Worries
track.
you, that worries you, doesn't it?
It doesn't worry me because the IRS knows me pretty well. I mean, I don't try to squirrel stuff away under the regulators' noses, but I mean, the reality is that, I mean, you could have a global computer downage. What good is
Yeah,
Bitcoin if
yeah.
no one can do anything with it? And so that's a possibility. You could have, serious, what do they call them when the sun disrupts, and you have these big solar flares that
Yeah,
temporarily take down
the grid.
they can take down the grid. They
Yeah,
absolutely can take down the grid. Well, what good is Bitcoin then? You also could have a concerted and coordinated attack on Bitcoin by federal governments. The fact that we have ETFs actually now makes that a little bit easier. They want to
interesting.
know who's in it. They may want to tax it.
Yeah,
So, hey, I mean, it used to be that Bitcoiners all had little USB devices that were their hard wallets, or a customized hard wallet, which frankly for me never made sense. That was akin to buying a gold bar and burying it in your backyard.
yeah.
It just for me was really didn't make sense. But I know early on that was the sentiment. Where now we have ETFs and we've got online lock boxes and all kinds of things. But I think the big bear case is what happens with the advancement of quantum computing. Can yeah now
Yeah,
the
I've been reading about that. It's
uh,
yeah, the
Bitcoin
power.
miners will declare, "Hey, we can do a fork. We can hard fork this thing and protect it." But I mean, hey, CBS TV ran their second little feature last Sunday, I think, on 60 Minutes on where quantum computing is right now.
Yeah,
And the ability of quantum computing is mind-boggling.
yeah,
And where sure, it absolutely could have the ability, let's say, to hack the Bitcoins owned by the ETFs. Now, could it hack the Bitcoin protocol? I don't know. I mean, I've heard arguments on both ways that the protocol itself uh, could be hacked, at which the miners say, "Well, we'll hard fork it. We'll hard fork away from it." Well, you hard fork it, and then quantum computing attacks your hard fork. So I'm not. I think the jury's still out. There's a lot of discussion on that, but nevertheless, what I'm saying is there are. Hey, let's just not lock in. Uh, let's just not lock into $1 million Bitcoin and think that this is inevitable. It's going to happen. You always got to look for shadows in the alleyway. Look for people lurking behind garbage cans. You always have to be aware that, whoa, what if I'm wrong? And again, it comes back to the way I was raised with parents who were children of the U.S. Depression. Uh, you always want to make sure you have
rainy
some
day
money in the
funds.
coffee can. Yeah, yeah, money in the coffee can.
Yeah,
You have,
did the VIX blowing up from 15 to 60 resonate with you anything about perhaps the liquidity and fragility of markets? And like TLT
yeah,
is now dots, Peter. I mean, it's not even a full candle. We're looking at dots there. I could
yeah,
talk to you, Peter Brandt, for a week. You know, I'm scrolling down here on your website and I look at this guy, Jonathan King, and I
yeah,
go, how fortunate is he to have to work with someone like you?
yeah.
So,
But JK is going to be more and more involved in what I do, as
yeah,
time goes on, because he's a young guy.
yeah,
I was hungry. I was willing to learn. It's hard work. It's hard work, and
it is.
come in and say, "Hey, I don't have much money, but I think I can make 10 grand a month or 1,000 a
Mhm.
day or whatever." Dream on. Um, anyone who on Twitter tells you how good they are, it's pretty much an unfollow.
How about people, Peter, who say that they have the secret to trading success? Because you know what the secret is? There is no secret. It's hard work, living through adversity, and if that scares you, do something else. I'm telling you, do
oh
something else.
yeah, yeah. It's like you got to pay a tuition. And again, there are a few chosen few. There are golden boys that I've known some, and I haven't
Yeah.
known very many, but I've known some guys that were firemen and leased a seat at the Board of Trade because Uncle Vinny told them to, and Uncle Charlie provided them a grub steak because the
Yeah.
entire unclehood was members of the Board of Trade or Merck.
I knew so many kids I grew up with that had that situation. They were
Yeah,
22 with seats, condos, and Mercedes.
because
Yeah.
they had it, and they walked
Yeah.
in the pit, and
They
it
blew
just
up.
or they had the gene. They they
Well,
they they had the least.
obviously, I didn't have the genes, Peter, because I'm just starting to get the hang of it.
Well, hey, I make the same. I still make the same mistakes I made
Yeah.
50 years. It was 50 years ago that I did my first futures contract
Wow.
in bags of silver coin.
I remembered that. Were you in them when they got lock limit up during the invasion?
Silver coin
I the
futures.
client left me with a D. He was long silver coin bags into the invasion of Afghanistan.
Yeah,
Yeah.
crazy.
Anyway, I'm telling you, I had a great time. I hope you enjoyed your time with us today because
I
you
did.
left enough pearls to string a necklace today,
Or
Peter.
hang it. Yeah, yeah. To hang a string of pearls or to create a noose.
Okay, yeah. But really, it was really compelling and fun to
Yeah,
have a conversation with you today,
me too, Dale.
Peter.
Let's do it again someday.
All right, we're not waiting another decade.
All righty.
All right, everyone,
Yeah,
Peter Brandt. It is recorded as well as being live, so you're going to want to watch this one again. I know I will. So everyone, remember, don't just count your pips. If you're a master or a beginner, count your blessings. Money comes and goes. Time is gone forever. Make it count. Thank you
thank
for giving us some of your time today, Peter.
you. Bet, Dale. Bye bye.
All right. Adios, everyone.
Okay, do I just cut it there? What do I do?